Working capital and the cash flow that it generates is the lifeblood of every business. That's why we've created the Working Capital Index, because it's a unique measure of working capital that shines a light on the pressures British businesses are facing to tie up more cash in working capital. Now, in our latest report, we've seen the amount of excess working capital trapped in British companies rocket to £535 billion. That's up 7% from our spring report and represents a quarter of UK GDP. We're seeing a period of historically high pressure to tie up more cash in working capital right at a time when British businesses need to be releasing cash to grow, to invest in new machinery, in new technology and trade in new countries. What's driving this? Well, there's been sustained economic growth, and when companies grow, they tend to use more working capital. We've also seen the fall in the sterling exchange rate and its impacts fully baked into the UK economy. Now that's caused the fastest build-up of inventory for British manufacturers in 17.5 years. Smaller companies have gone out and forward purchased. We've also had inflation and rising input costs impacting inventory, and because of the uncertainty in the environment, a lot of companies are just having to hold more of an inventory buffer. So that's more cash in working capital. 1 in 4 companies also told us that their clients are taking longer to pay. That means more sales on credit and again more cash tied up in working capital. But what does this actually mean for a British company? Well, in our spring report we called out a risk. We said that if companies are building up historic levels of working capital at a time when there's so much uncertainty and when financial conditions were deteriorating, it essentially means that they're betting on growth. Because if growth doesn't materialize, they're sitting on a lot of idle assets right when they need the cash to be financially flexible. Now in our autumn report, we're seeing a lot of British companies voice that concern. 1 in 3 companies that we surveyed said that their biggest challenge for managing working capital in the next year was economic uncertainty or a risk of fall in sales. Now, most economists are forecasting that growth for British businesses is going to increasingly need to come from exports and international trade. And that means 2 things. British businesses need to find the right new markets to trade in, and companies that manage working capital well are going to have the cash flow and financial flexibility to take advantage of those new opportunities.